How's it going, guys? In the last video I talked about why the EV market is a market that you should consider investing on. In today's video I am going to talk about some of the EV plays that you should put on your wish list. My name is Nelson Kanyanga and welcome to the Cashless Investors.
All I hear, go get the money, so I go get it. Hate means I do something right.
The first company is a company with a market cap of $913 billion, and at the time of this recording it is trading at $888 per share. In 2021, this company sold 936,222 vehicles, putting the company with a market share of 13%. This company, as you can guess, is Tesla. Tesla is considered as the leader of the EV market, and it's not only because of its popularity, it is because it is a company that is continuously growing with a year-on-year revenue increasing. This is a growth company. Of course, revenue should continue increasing, and of course profitability is what investors want to see with Tesla. And recently Cathie Wood, the legendary investor, just upgraded Tesla target price, which according to her, they're expecting that in 2026 Tesla is going to be trading at $1,300 per share. I mean, Tesla is a stock that if you were investing in the EV market, that's the first stock you should think about investing on. But of course, you should be aware of the risks when you invest in growth companies. Elon Musk is both the reason why Tesla's price go up and down, because you know how active Elon Musk is in the social media. And recently, Elon Musk just acquired Twitter. And of course, that is bringing some uncertainty to investors as they are wondering, where is Elon Musk going to take that money from? Is he going to sell some Tesla shares? Of course, these are the types of risks that are associated to Tesla share price. Of course, I'm sure that Tesla is going to be the leader on the EV market, and that's my number one stock that you should consider. The second company is a company that was founded in China, which is considered as the country with the largest EV market share, representing 44% of the total number of EV sold within a year. And at the time of this recording, this company is trading at $16 per share, which I consider it as a bargain considering the potential that this company has. I'm talking about NIO. Although most of the cars sold by NIO are sold in China, they have an expansion plan where they expect by 2025 they are going to be entering 25 different countries. Right now they are starting to expand in Europe, where Norway is considered as the number one country where they are expanding. That's a country where EVs are going to be dominating without a doubt. A lot of investors are expecting that NIO expand to US as soon as possible, and that's what we need, guys. The more NIO sells in different countries, the more exposure there's going to be, and of course more revenue. This is a growth company as well, and of course there are some risks associated into investing in NIO, and one of them is because it is a Chinese company. Unfortunately, there are people that believe that Chinese companies are uninvestable because they have that stereotype that Chinese products are not good. But guys, most of the products that we own or we use are made in China, so quality is not a problem when it comes to cars, and NIO is the company that you should consider investing on. Of course, they also have this technology which I consider to be an unfair advantage, and that's the battery swap technology. And it's a technology that I'm going to be discussing more when I do a technical and fundamental analysis on NIO. But right now, guys, NIO is a stock that you should consider investing on. And guys, I'm not a financial advisor. This is just my recommendation. And of course, these are stocks that I own. I've done my research and I believe that they are going to explode. Right now, the market is not being fair to anyone, and most of the days they are red. But I trust the process, and I know that NIO, Tesla, and of course ChargePoint, which is a company that is in the battery charging industry. You know, battery charging is a subset or is a sub-market of the EV market, and ChargePoint is just the leading company when it comes to charging station. In the last video I just mentioned that the US wants to build around 500,000 charging stations across the US, and of course ChargePoint, of course there are different companies, but this is the leading company in the EV charging station, and they have level 2 and they have DC fast charging, which is a key player when it comes to charging company. So guys, I am going to start doing fundamental and technical analysis, and these stocks I'm going to discuss in depth, and you are going to decide by yourself whether you want to invest in ChargePoint or not. But again, this is a company that you should at least put on your wish list. The fourth company, which I consider to be not a simple company, this is an ETF, guys, and you are going to understand why. That although this company is currently trading at less than $2 per share, which makes it a penny stock company, this is a company that you should definitely look into. Why? Because they have done so many good acquisitions, and of course that came due to the dilution that they did. Okay, they wanted to raise capital to make such great investments. I'm talking about Ideanomics. Ideanomics is a company that currently made the acquisition of Energica, which is a two-wheelers EV company, and they are in the process to finalize 100% stakes on VIA Motors, and they own Soltruck, which is an EV tractor company. And of course, you know that we want to go green, and farmers as well are one of the people that want to go green as well. So they want to electrify the way they do their job. And one of the key technologies that Ideanomics has is Wave, a wireless charging technologies for commercial fleets. Guys, I'm telling you, this is big deal, and I'm pretty sure that these prices are not fair to the value that Ideanomics is going to be offering in the future. And Wave alone is, a company that should be trading at least at $5 per share, let alone how much Ideanomics should be trading at. So I'm pretty sure that Ideanomics is going to be trading at more than it's currently trading. And as I said, these are my opinions only, guys. You do your research, do your due diligence. Of course, you are going to come up with a better understanding of whether you should consider Ideanomics or not. The last company, guys, it's not a company that is directly involved in the EV market, right? They are not building EV cars. They're not on the charging market, but they are on the battery market, right? Because they explore lithium, and lithium is one of the key elements in the EV batteries. So I'm talking about LAC, ticker symbol, and you guys should check it. It's currently trading at $25 per share, which I consider to be a bargain considering the value that it's going to be adding in the future. And that's a company that you should consider investing on. This video is just telling you guys in the general terms. Next video, I believe that I'm going to be discussing about either NEO or Ideanomics or ChargePoint plays, guys, or any other play that you believe that I should discuss on. So comment, guys, and let me know what stocks you want me to discuss about first. And if you are not yet subscribed, please subscribe to the channel, share it with your friends, like it, and see you guys in the next video.